Hi, this is Alan Laubsch with Financial Network Analytics, and welcome to F&A Correlations. Today we'll focus on oil and its relationship to equities. We've generally seen a positive correlation of oil and equities, and plunging oil prices have taken equity markets with them. So a thesis is that equity markets won't be able to rally substantially until the correlation declines. So let's look at this minimum spanning tree of our cross-asset class ETF view, which contains 41 different ETFs, very liquid ETFs, different asset classes from equities here. You can see a bond cluster, which underperformed yesterday, and then we can see oil and commodities here. Very intuitive to interpret. The assets that are close together are grouped close together. The links are representative of correlations, so short links like between gold and commodities represent high correlations, that's at 0.9. Slightly longer links would represent lower correlation, like 0.83 correlation between oil and the energy sector. Let's reorganize this chart a little bit. First, let me zoom in. We can see that the energy sector is then correlated to the core of equity markets, in this case to our aggressive portfolio, with a 0.82 correlation. Now we're going to reorganize this chart to look at oil and the correlation of oil to major assets. So what we'll do is we will focus only on the assets that show a correlation above 50%. Okay, so you can see clearly that oil is close related to commodities in the energy sector, but there's also a very high correlation, 0.69 correlation to emerging markets, and that correlation actually is close to a 100-day high, which was at 0.73. So the energy link between emerging markets certainly has not been severed. The correlation between oil and high-yield bonds is also very high, 0.68, also close to a 100-day high, which was at about 0.74. The equity market that's the most correlated to oil is the UK with a 0.67 correlation, also very high to its correlation of 0.74, 100-day high on 26th of January. Not surprisingly, the most correlated currency is the Canadian dollar, also at 0.67. Interestingly, that correlation has dropped slightly since its peak of 0.8 in January, so that's a good sign for the Canadian dollar on a relative basis. Emerging markets bonds are also highly linked to dollars right now, currently at 0.67, close to its 100-day high of 0.74. You can see this relationship is not as stable. You can see that the correlation was slightly negative earlier in the year, and in 2014 there was a stronger negative correlation at certain points in time actually. European equities have shown a correlation of 0.63 as of yesterday, just short of its peak of 0.7, so down marginally. And now let's look at the correlation between the Dow and oil, which is at 0.58. Just a touchdown from its 100-day high of 0.63, so not much progress there either. And the S&P 500 to oil is at 0.56, just down a touch from its high of 0.66, which happened on the 26th of January. So far, oil and equities markets are still fairly tightly coupled. Until that link becomes severed, it will be a struggle for equity markets to reach substantial highs because there's so much downward pressure on oversupplied oil. Thank you for listening. If you have any questions, please feel free to email me at alan@fna.fi.